Hey, I'm Jusko from ProbMoney.com. In this video, we're going to look at the best CD rates today, which in this case means in early 2024, we are going to look at the best rates at 6-month, 1-year, 2-year, 3-year, and 5-year terms. And then after we do all of that, I will talk about what a CD is, the pros and cons, and some other stuff about CDs if you don't know, but we're going to start with the rates. Now, as I make this video, interest rates have been going up over the last 3 to 6 months, and the feeling out there is that we're kind of at the highest place that they are going to be, at least in the short term. So over maybe the next 3 to 6 months or next year, they might actually start going down again. So what you're going to see with these CDs is they're actually giving higher interest rates for the 6-month and 1-year term than for the longer terms. But that doesn't necessarily mean that you don't want to lock in these rates for the longer term, because it is possible that if rates go down, you won't be able to get those rates again in a year or whatever. So anyway, let's start with the 6-month CD. There are 2 places as I make this video where you can get a 5.5% APY or annual percentage yield on a 6-month CD. Those places are BMO Alto, which is sort of the internet version of BMO Harris, 5.5%, and Countrywide Credit Union, which is in Indiana, also at 5.5%. That is a credit union that pretty much anyone can join, although you might have to do some machinations to actually get through it if you don't have a sort of natural membership. Lending Club, 5.3%, Synchrony Bank, 5.25%, Marcus by Goldman Sachs, also 5.25%, round out the top 5. For a 1-year CD, the top 5 all sitting right around 5.5%. Lending Club is actually at 5.55% APY, and then at 5.5%, you've got Bread Financial, which you might also know through their Comenity Bank division, Marcus by Goldman Sachs, BMO Alto again, and Wide Credit Union. Since I've mentioned BMO Alto a couple times already, I do have to say from personal experience, I went to go open a CD at BMO Alto, did it online. They could not verify my personal information, and so I called in to try to get the CD, and when I did, they said they could not do anything about it. So I could not give them any further information to prove who I was, and so I just simply could not open the CD. I don't know if this is a common problem with BMO Alto, or maybe they have too many people wanting to open CDs, and so they are trying to restrict it by saying they can't verify your information. But that is my personal experience. Maybe others are having a different one. All right, 2-year term CDs, number 1 is Community-Wide Credit Union again here with a 5.0% APY for 2 years. Sallie Mae Bank, 4.9%. Marcus, again on this list, 4.85% APY. And then finally, First Internet Bank, which we have not talked about previously, 4.85%. When we look at 3-year CD terms, our top yields come from, first off, First Internet Bank, 4.75% APY, BMO Alto at 4.6%, Community-Wide Credit Union at 4.5%, Crescent Bank, which is a New Orleans bank, 4.5% as well. And then finally, let's look at a 5-year term, number 1. Once again, we see BMO Alto at 4.6% that you can lock in for 5 years. First Internet Bank at 4.59%. Quantic Bank, which we have not mentioned before, 4.3%. Bread Financial here again, 4.25%. And Crescent Bank again, 4.2%. All right, so those are the tops at 5 different CD term lengths. I do want to mention here that different banks and credit unions may or may not have a minimum deposit in order to open a CD. So looking at the ones that we just talked about, I didn't go over them individually. Some of them have no minimum deposit. Some of them have a $1,000 minimum deposit in order to open a CD. A few of them have a $2,500 minimum deposit, but that is the highest minimum of any of the ones that we just talked about. So those are the rankings as I make this video. When we went through about 25 to 30 banks and credit unions that we knew were on the higher end of things in terms of finding out what those best rates were, you will notice that a lot of your bigger banks were not represented here. So no Chase, no Bank of America, no Citibank. I will say the Capital One and Discover are a little higher and aren't that far off from some of the numbers that we talked about, even though they were not in the rankings. So you could look at them as well. Now, if you want to know a little bit more about CDs, you're maybe not sure exactly how they work and what the pros and cons are of them. First off, let's talk about how they work. So with a certificate of deposit, what you are doing is you are depositing money just like you would into a bank account, but what you are doing is making a commitment to keep that money in that certificate of deposit for a certain amount of time, and in exchange, you will get a higher interest rate or annual percentage yield on the money that you have deposited. And then what happens is, if you decide you're going to make that trade-off in order to get the higher interest rate, well, if you decide you want that money out before the term of that CD, whether it's 6 months, 1 year, 2 year, 3 year, 5 year, or there are other terms as well, if you decide you want that money before you've reached the end of that term, well, there is usually going to be a penalty to pay, and it could be anywhere from 3 months interest that you earned on the CD all the way up to a full year of interest, depending on how long the term of the CD was to begin with. So if you put money away in a 3-year CD and you decide you want it out after 2 years, well, you might end up paying a full year of interest that you earned on that CD in order to get the money back out again. So that is the penalty. This is the trade-off you're making. You are locking up your money for a certain period of time in order to get a higher interest rate, but if you decide you need that money beforehand, you're going to pay a penalty. Couple other rules to know with a certificate of deposit. When you open it up and you decide how much you are going to put into the CD, that is how much is going to stay in the CD in terms of your deposit. You're not going to be able to put more of a deposit on top of whatever you started with. So if you started with $1,000 and you said, hey, I got another $250 and I want to throw it on that CD, you cannot do that. So essentially what you're doing is sort of making a loan to the bank, and they have committed a certain interest rate on that amount of money that you gave them. So if you have more money that you want to deposit later and you want a CD, you would have to open a new CD for that new money. In terms of withdrawals, we already talked about the penalty if you have an early withdrawal, but you should also know that if you decide to withdraw your money, it is an all or nothing proposition. So you take all of your money if you withdraw from a CD, not just a piece of it in hopes that, maybe you'd still get the same interest rate on whatever is left over. No, if you take it out, you have to take it all out and you're going to get the penalty on the whole bit. And then finally, I want to mention the concept of CD laddering, which is a strategy that some people use to sort of hedge against the changes that happen in interest rates over time. So what a CD ladder means is that you take out multiple CDs of different lengths, and then as each one of those CDs mature and you get the money back, you can then put it back into a new CD at whatever the current interest rates are. So by doing this, you don't lock yourself into a spot where maybe interest rates are lower and then the interest rates go up and then you have all your money locked away. If some of it is always maturing, well, then you can take advantage of the higher interest rates, at least to some extent, when they are available. Now, the downside to CD laddering is, if it's not obvious, that sometimes you might put your money in and interest rates go down. So when that CD matures and you get the money back in and you go to buy a new CD, the interest rates are actually lower. So sometimes, especially as I make this video, in today's environment, it might make more sense to lock in some of the rates that you see, because the expectation is that interest rates are not really going to go up very much higher, if at all. And so this might be a case where CD laddering is going to hurt you more than it helps you. So CD laddering tends to work better when you think interest rates are low and they potentially could go up over time. But either way, it sort of hedges your bets so that you are at least sort of getting the average of whatever the interest rates are over a certain time period. Hey, that's it. Questions, comments, or any banks that have great CD rates that I missed, put those in the comment section below. Otherwise, I thank you for watching. And as always, please go to proudmoney.com, where we do credit card reviews, we talk personal finance, we talk deals, and all sorts of other fun stuff too. If you're not leaving a comment or going to the website, the next video you're going to want to watch is right there.